Hello and welcome to Acclime's podcast series, Advancing Vietnam, with me, Vlad Savin, as your host. Throughout the following episodes, we're looking to answering relevant questions about doing business in Vietnam. What are the opportunities and challenges faced by investors entering the market or existing players in major industries? We will seek to understand the business environment from a cultural, local mindset and how to deal with compliance from an international perspective. What are the major risks faced by businesses active in the region and how to overcome them? We will dive deep into the compliance environment in Vietnam, discussing processes and procedures, changes in laws, latest official updates from the authorities, and financial governance planning for businesses active in Vietnam. We at Acclime consider compliance a major asset for foreign investors operating in Vietnam. We emphasize this aspect when speaking with our clients, and we make sure they understand the significant benefits of being compliant. In this episode, I'm discussing with Matthew Lourey, managing partner at Acclime Vietnam, about the changes and updates on regulations and policies relevant for international investors in Vietnam in 2022, with insights on taxation, employment incentives, and other important compliance provisions. Matthew, welcome to our first Advancing Vietnam podcast series in 2022, and I look forward to sharing more information about what's happening and what's important for international investors from the compliance perspective, and what should they be aware of for the start of the year, looking at regulations.
Great to be here again, Vlad, and I look forward to discussing it with you.
Matthew, let's dive in and cover one of the latest information from the authorities with respect to social insurances for expatriate employees working in Vietnam. From 1 January 2022, foreign individuals working in Vietnam and their employees are required to fully participate in Vietnam's compulsory social insurance program, resulting in an increase in the social insurance contributions for both employers and employees. Can you share more about the changes and how do these affect employees and employers alike in respect to their insurance contributions and responsibilities?
Thanks, Vlad. So the changes for compulsory social insurance contributions have been in the process for 4 or 5 years now. It's not new, it's just that this is the final step to something that started a number of years ago. We have a situation where up until 1 January 2021, foreign employees only had a small part being paid by the employer. They were exempt from most of the insurances. So the changes now mean that foreign employees, when it comes to both health insurance and social insurance, is the same. What are these? We've got 3 portions: unemployment insurance, social insurance, and health insurance. Unemployment insurance is only paid by Vietnamese employees, and that's never going to apply for foreign employees. So we don't need to talk about that. That's just the topic that is reserved for Vietnamese. Health insurance is employer-employee funded. There is a high portion from employers and a small portion from employees. And social insurance, the same. Health insurance has been paid for a number of years now by foreign employees, most. If you have a work permit, you basically work permit and you're not an internal transfer, you are required to pay health insurance and now social insurance. Up until 1 January, 3.5% was being paid by the employer, and that's it. We're now moved to the point where there's 17.5% is required to be paid by employer and 8% employee. Now, there are caps. We'll hit them in a moment. 8% for the employee is deducted from gross salary. So it's salary less 8%, then less personal income tax, then equals take-home pay. That 8% is capped at $29.8 million. The reason these caps exist is so that anything above that is not contributed. So when you do your social insurance and your health insurance calculations, you are only paying up to that amount as that calculations. Employers the same. So the social insurance is 17.5%. capped, so you don't pay above the cap. So this is going to be additional cost. Employers need to factor that in for foreign employees. For those on large salaries, it's a relatively insignificant extra cost because of the cap. For those on lower local equivalent salaries, then it is going to be a big impost. One little catch is that 17.5%, 0.5% of that is deferred this year until 1 July. You don't have to pay it. So it's 17% for the 6 months, then 17.5% reverts back to standard. What do you get for this? This is important for employee. This is not just a cost. There is a benefit, and employers will have to consider this because the payments you make for social insurance are for, there's workers' compensation for accidents, there is sick leave, claims for sick leave come out of that. Maternity leave, 6-month paid maternity leave is paid out of the insurance fund, and pension retirement. It is that pension retirement that is the bulk of what we're talking about here, this new increase, that if someone has not worked for 20 years, or 15 years, this new provision they're bringing in, you can't get a pension, which is expats generally, that won't apply to them. You can get a refund before you leave Vietnam. You can apply for a refund. There are certain requirements, but that is payable. So even though the employer is paying an additional amount, it is a good portion of that is refundable to the employee when they leave Vietnam.
The entire portion that they contribute, for example, the 8% that you mentioned, is
returned
back.
The entire 8% is returned, and 14% of the 13.5% is returned
to the employer
to the employee when they leave. For basically, it's your pension contributions that you will not be accessing later. Therefore, you can have it back on departure, and that's not unusual. We see that in a number of countries for the pension schemes. If you contribute, you can take it back out if you are leaving the country for good.
And covering another important topic for investors in Vietnam, work permits. Since the middle of 2021, the situation in Vietnam with COVID-19 outbreak grew more complex, resulting in further difficulties for enterprises and for individuals to renew and also apply for work permits. What is the current situation now in practice for applying for new work permits, and what changes has the government released to ease the process for renewal applications as well?
So it really was painful at the start of the year when we had the new law, which was quite strict in how they implemented it, and it reverted back to not being able to use in-country experience, to requiring a specific degree that was exactly the same as the role being done. The outcry from the foreign community and those employing foreign individuals was that people study and then they create a career and doesn't have to follow exactly what they studied, and if they've got experience in country, it's going to be difficult to get, after being here many years, to get experience documents outside of country, and with COVID, you can't travel to get those documents. Then when we had the COVID crunch here and really the authorities saw the difficulties, they've reverted essentially to what we had in the past. Not quite the same as that, but that's the essence. So what they've done, the two main parts of Decision 105, which was the government, Prime Minister, requiring certain actions to alleviate pressure on businesses for work permit purposes, was that in-country experience can be recognised. So historically, that was if you had a work permit for a company, you were evidence that you were working and therefore have experience in that field you're employed with the title you have. You can now use that again instead of getting a foreign experience to show you've got 3 to 5 years experience in a sector. Because Vietnam, just to keep in mind, foreign employees are allowed to work here. One of the main reasons is because they're an expert. And you have to prove you have that expertise. So that's that first part. The second thing is qualifications. That is generally a university degree or higher, and it must be relevant for the field. They've relaxed that, where it can be connected, but it doesn't need to be specific, because a lot of countries don't issue specific degrees. And a lot of people do degrees and then become experts in their field, which is a adjunct or different to what their degree they studied. So the authorities now require a university degree, but it doesn't in all cases need to be specific. There's a catch though. As always in Vietnam, there's a catch. That was a requirement from the Prime Minister to the authorities to implement this. Not all provinces implemented it. Now, Hanoi was one of the first. We've had no issues. Other provinces are applying it, but they haven't formally implemented it, or there's various interpretations of. So it's not a blanket being done the same across the country. Vietnam is not homogenous. There are 63 provinces that interpret and apply the laws that the national authorities set. And that's always a misconception with, I see people in Vietnam where they go, oh, but the law says this. Yeah, the law may say that, but implementation differs. It shouldn't, but it does. You've got 63 different authorities implementing it. So we don't see consistent application across the country. We have not seen official letters and implementation of it across the country, but we do see it working, and it is something to keep in mind that now you have that luxury of ability to not have to deal with what we had at the start of 2020, which was very difficult for most.
And going back now to another interesting topic related to tax deductions, there were quite a few in 2021, and I'm curious what will happen in 2022, and in your opinion, how do you think the government will look at these tax deductions and enforce them and prolong them from 2021 moving forward? For example, Decree 92, released in November, states the 30% reduction in corporate income tax in 2021 based on certain criteria. What will happen with this in the future, for example, or any other tax deductions?
Okay, so from a deduction, there's two different parts that are issues you're raising there. With deductions, we had the issue with deductions of, for example, COVID costs. They were regarded as an employee benefit, potentially not deductible and taxable. The authorities clarified, so if you're doing testing and others that you are not, they are tax deductible. So we've got things that were regarded as staff welfare that may not be deductible, may be accessible. The authorities have agreed that pandemic, they're deductible. They're a cost of the company and they're allowable costs. So we've seen some of those deductions which were, there's always been grey areas in there. We've got clarity on those. That will continue. That's a look forward clarity. So costs for dealing with COVID pandemic with employees and to keep the workplace safe, and those sort of activities are now allowable where they weren't not necessarily in the past. When it comes to the benefits, so the tax reduction and VAT reductions, and there was others that existed. So we had a VAT for, I think you might have the data, but I think it was 2-month period or something thereabouts. So we had, some companies had a partial reduction. There was some F&B, there was tourism, etc. They were almost, I call them feel-good measures. I don't think they were that substantive, and they're complicated because the inputs and the outputs and the reduction doesn't make much difference. And it's not really because if I'm collecting the 5%, I've got to pay it back to the government in versus 10%. So I see that as maybe had cash flow benefit, but I don't see them substantive. The CIT reductions can be substantive, but again, they were limited to employers with less than 200 billion turnover, so around about $8 million US, and they must have decreased their revenue since 2019. So 2020 must have been a decrease for 2019, otherwise you couldn't access it. So reduction in revenue, reduction in revenue and under the revenue cap. Then you could get a 30% decrease in your corporate income tax liability. There were a number of sectors, specifically named, that did not have that cap, that were automatically entitled to it. And we saw that in 2020, the same thing. So the 2021, your tax in 2021, we saw 30%, just talked about. There was a reduction in 2020. Will there be a reduction in 2022? Probably. This pandemic is going to continue. The authorities, we've seen some of the tax revenue discussions, they've done quite well. The authorities, despite this, Vietnam's GDP growth we've got positive GDP, export growth was 19%, we've got trade surplus. Vietnam, the authorities have realised they can afford. They haven't actually invested a lot, by the way, in giving money back to business. There hasn't been money pumped into businesses like other countries. There is a bit more money in the treasury. So will we see reductions? Yes, it'll be targeted. It won't be blanket, and it'll be targeted. So we'll see further tax deferrals, tax reductions, and we will see this come into effect, yes.
And one of the updates as well related to business activities in general in Vietnam is related to their e-invoices and e-invoice compliance. What are the latest changes in regards to using the e-invoices and the system the authorities put in place for companies active in Vietnam?
Yeah, so we saw misinformation about e-invoicing where it's new for 2022. It's not new for 2022. What we have seen is this 5-year period of introduction, testing, trialing systems. This is just the culmination and the final step where it is expected that everyone is e-invoiced. Now they've tweaked it, they've changed the system, they've changed things based on experience. We're now in a single level playing field, and that is the vast majority. There are some exceptions for private business, for small sole traders, etc., but the vast majority of businesses now are required to issue e-invoicing. It's electronic. It's done through the tax office itself in most cases. Supermarkets and high volume businesses are doing it themselves and just reporting, but it is a system whereby now it's much more robust. The implications are that you don't have the ability to backdate. You can't, manual invoices, you could fix it, one from last week. No, it's not. The system is regulated. You've got to be much more planned and careful about when you issue and that it relates to the period, because you can't fix something if you get it wrong. The other one is the authorities have data about who's buying and selling. You can't just pick and choose invoices anymore to use for those who ran different sets of books. It's now bringing it together. So before, we've had this transition period where a lot and most and all new companies were using e-invoicing. Now we've got everyone is using it, and it is a centralised system, and it is a complete system now. There are the few exceptions are irrelevant to the economy when it comes down to volume and size. You just have to assume that everyone's going to be covered by this, and it is just something that it's electronic now. This should be the stepping stone now to really becoming electronic, paperless society when it comes to business and it comes to accounting and tax and compliance. We're not there. Other countries, Indonesia went through this 3 or 4 years ago. We're on that path now. So the pandemic has brought us to it. E-invoicing was already underway, and it's proven that you can do it. So I just see this as a great stepping stone to digital documentation and not paper copies of every voucher and everything that we do.
And let's look now a bit about more of a sectorial broad overview. And I chose 2 sectors for the next questions. One that was hit quite hard by the pandemic and trying to understand what are the new updates from the government to support these sectors, and the other one that actually had a major boost within this pandemic. So I'm talking first about tourism, and obviously it was hit, as I said, quite hard in the last 2 years. What are the support measures in place for 2022 in your opinion, and also based on your previous discussion that you had with Ken Atkinson, one of the major business people here focused on the tourism sector?
Tourism, I think the authorities are holding off. I think the support measures, we don't have specific support measures of any great note out there other than the VAT and the corporate income tax and deductions. We're going to see incentives. We're going to see tourism, unlike other countries, so Thailand, for example, was heavily dependent, and that strangled the economy. Vietnam was a good portion of the economy, but it wasn't. The economy was built on an export base and a manufacturing base. Tourism was a side. Important, but it didn't strangle the economy. So the authorities aren't pressured into doing something that's going to be not helpful for the long term. I still think there's going to be significant benefits coming. I think there's going to be significant incentives, training, reductions in contributions for employees. I think there's going to be a lot of things that the authorities will do for tourism by itself. I don't know when that's going to be. So when we have a better idea of borders, so they will approve and they will subsidise and will put in place. Now, whether the authorities are going to focus this on domestic tourism, we don't know, or whether foreign tourism, time's going to tell. Omicron is sitting above us, and as we're talking in this podcast, Vietnam hasn't had any Omicron cases that we're aware of in the community. We know it's going to come. So I think the authorities are going to hold off on tourism until after this next wave, and as the COVID situation goes through, until they're going to make announcements. There's no point investing in tourism now from the authorities' point of view if it's just going to be suspended and stuck in process.
Mm-hmm. And the second sector that I mentioned, which sits actually on the opposite side of tourism from a growth perspective, is e-commerce, which obviously has massive potential in Vietnam. The latest government circular regulates how e-commerce platforms declare and pay taxes on behalf of their partners and sellers. How do you see this change affecting the compliance for e-commerce providers here in Vietnam?
So e-commerce is the winner out of the COVID situation. E-commerce is the winner. So Vietnam was was growing into the e-commerce platforms and using that as part of society, but the pandemic just exploded that as becomes a necessity part of life, and it was cash on delivery. Now it's online payment. So the whole thing's changed. The model's changed, and the dependence on that has changed. At the same time, the authorities were trying to deal with cross-border, trying to deal with platforms, trying to regulate. So we saw a lot of changes to bring this to where it needs to be. What you've referred to is the taxation situation, where one of the announcements previously was that the platform providers are responsible for taxes. They said, we can't track everyone, platforms. There was a bit of outcry. So the latest is that the platforms are not responsible for taxes. They're responsible for reporting, but they're not responsible. They're not the tax agent. They're not withholding and remitting taxes. They're not like employees. So an employer will for the employees, but for other companies, other businesses. So they have a responsibility for reporting, but not withholding. And that's critically important because it allows platforms to grow and not have that tax burden that someone else may not pay them, or there may be something else happening at the same time. So it removes that problem. We saw the same thing, by the way, with cross-border taxation for non-resident digital providers. One of the arguments was the banks can withhold taxes on payments. The bank said, we're not a tax agency. Again, that was removed. So we see the authorities being a bit more pragmatic about what the reality is. What it does, though, is gives the e-commerce provider the ability, if the seller consents, to do that for them. So you can still withhold and remit taxes, but that's got to be by consent. It's not the default. And that means that platforms don't have this tax burden sitting above their head, which was the issue. That was the big issue, was that growth of e-commerce was who has to pay the tax. So if you are doing e-commerce selling, if you're an individual sole trader, if you're a business, the tax rests with you. It's out of your revenue. You have to remit it, and you have to make sure you've got the systems in place. Your platform may help you with that, they may not, but the obligation rests with you.
Mm-hmm. And finally, there are a few policies in place which started as well in 2021 to support specifically employees and companies affected by the pandemic. I'm referring, for instance, to reduction in social insurance contributions for occupational accidents and disease fund, loan support to pay salaries during business recovery for a few selected industries and companies. Can you share more about these or any other support packages from the authorities that you think will still be valid in 2022?
Yeah, most of those support packages actually expire 31 December 2021 actually. So, but that 0.5% reduction in workplace accidents is till 30 June 2022. That's that 17.5 in total insurance contribution down to 17. It's actually part of the social insurance contribution. They've reduced that by 0.5% until the end of the year, and the middle of the year. That, by the way, that 0.5 reduction is because companies are spending more money on pandemic, and therefore it was to compensate for the additional costs, because people, if they're not in the workplace and they're at home, they're not going to have an accident in the workplace, but you're paying as if paying for their welfare. So that was an offset to do that. So there's not expected, that's not expected to be a reduction. That's really just reflecting a reallocation of what's going on. The loans as well, very few loans I understand were actually put out. This idea of putting preferential loan packages for businesses that needed to pay salaries and to help businesses, there were so many conditions, and it's quite a bit of outcry about it that it's just not practical. And so the satisfying the requirements, getting documentation, accessing it, and then you had a relatively short time to pay it back. So I'm not aware of many who took advantage of that. I think that was much of the PR situation, and I saw some information where what they've expected to put out, what they did put out was a very small portion of that. We will see more of these sort of things going across into 2022, because the payment of salaries and the payment of staff is what the government's going to protect, to make sure that the people have that. So there's various things. So, for example, the trade union is putting packages to encourage. So if someone gets COVID, or someone if there's surplus in the trade union funds, they're being employed to return them back to the employees, to encourage people to have money. It's all about spending. It's all about keeping the economy going. So we will see more employee support options, I suspect, in this year. And I'm talking about potential deferrals, reductions in some of the insurance contributions like we've seen in the past. I expect there's going to be potentially changes in tax rates, potentially other changes that can help. What we haven't got, and the government actually put out recently that yes, there is another package to come. What we don't know is how they're going to use that. We don't really have an idea. Will it? And if I think about it, just as we're talking here, it's less about sectors now. I think we're at a point where we've sort of got this uniformity where everything's working again. F&B's impacted, tourism's impacted. Whether they go for those impacted, or whether they just go, hang on, the economy's back. How do we encourage employees to return from the countryside? How do we encourage people to have stability in the workplace? So I think they're going to be more about those stability and encouraging employment, and encouraging individuals to be confident about working, rather than necessarily the same as they've done in the past.
Mm-hmm. Well, final questions to wrap up the discussion today. What would be the key areas you consider as a focus for 2022 from a regulatory perspective and compliance perspective for foreign investors to ensure they start the year on the line with latest updates and changes?
So, good question. I would argue e-invoicing is one, because both on supply on both sides. So you issuing invoices, you've probably been doing that for a while, but your customers who have not are now forced into it may have issues where they want to defer and issue at different dates and play around with things. They can't do that anymore. And your employees getting invoices when they should be getting invoices from suppliers. So that's going to be an issue to deal with, and that may have dates on end of month or end of quarter. It may have implications for what you're doing. So just be careful about that. It's very hard for someone to backdate something now if they don't give it to you at the right time. Another focus area for businesses and compliance will be loans. We're seeing the authorities are not the state banks in the various provinces are not flexible on that. So if you are doing loans, register them, knowing what the source of funds, what you're doing with them, having plans of repatriation of those and bring more money back in if necessary. But short-term, medium-term loans, making sure they are done in the right way and don't just bring money in and deal with it later. You're going to get caught out. We're seeing the state bank not providing much flexibility. If you've inadvertently done the wrong thing, you're going to be punished. And it's a financial, very large impost, so just be careful about that. The third thing is going to be tax audits, because we have seen the last 2 years tax audits, they've existed, but they haven't been as heavy-handed because they haven't been doing visits, particularly in 2021, to sites, to companies. They've been doing desk audits, and they haven't been doing as many as they've done in the past. There's a backlog. They're going to go for easy targets. And the tax auditors are going to go out, and labour auditors, but tax auditors is my biggest concern, and I see that could be a major area of issue for foreign businesses. Is this had a bit of a break for a while now to face the tax audit and face the consequences if you're not compliant. So be aware, plan for tax audits, get your compliance, get every documents ready, and just assume that you are going to be audited, particularly if you think you've missed out and got away with things, you're going to be targeted, I believe.
Mm-hmm. Matthew, our time is up. Many thanks for your insights and for the practical advice again. First podcast of the year. Looking forward to many more interesting topics in the next month.
Fantastic. We'll see what 2022 brings, Vlad, and look forward to more of these discussions.
This completes our first podcast of the year, and I would like to take this chance and invite our audience to follow us on LinkedIn and on YouTube to stay updated with the latest changes and regulations from the authorities in regards to business in Vietnam. Our teams are constantly reviewing and sharing the most important and relevant news for our clients and extended business community through client alerts, tax updates, market insights, industry studies, alongside our regular events, video conversations, and podcasts.